And another resource that we provide our members is market data. A little preference. All of the data I'm going to share with you is pulled from a number of sources online. A lot of it comes from the Texas A&M School of Real Estate and some other sources. We do post this on our social media, so you're welcome to be a student of the market by studying and keeping track of where we are. And then one disclaimer, we're not here to try to convince you of anything. Okay, there are organizations out there, and every time they give a market forecast, they're like, the market's going up. If we think the market's going up, we're going to tell you the market's going up. If we think the market's going down, we're going to tell you the market's going down. If we think it's sideways, we'll say sideways, right? And we've been doing this for years. We're not here to try to persuade you of any particular event, okay? So we're just going to give you data, market drivers, and then kind of give you a forecast based on the data. And then you can decide, because we have strategies for up markets, down markets, and sideways markets, and you have to be a student of the market if you want to be real estate. There's huge opportunities right now, right? But you want to know what they are by being a student of the market. So, what is the biggest story over the last couple of years when it comes to real estate? What changed? Interest rates. Interest rates. What happened to interest rates? They went up. They went up. Okay, so let's talk about interest rates. We're going to do a little poll of the audience, and I'm going to ask for your opinion. And there's no right or wrong. Where opinions can't be right or wrong. It's just like, what do you think? Do you think interest rates are high? You think interest rates are low? Let's do a poll. Who thinks interest rates are kind of high right now? Who thinks interest rates are kind of high right now? Raise your hand if you think they're high. Who thinks interest rates are kind of low right now? Raise your hand if they're kind of low. Okay, now there's only two choices, and you can't be wrong. So we're going to try this again because I'd like to get 100% participation, okay? Because you can't be wrong, so there's only option 1 and 2. Who thinks interest rates are kind of high right now? Raise your hand if you think they're kind of high. Who thinks interest rates are kind of low right now? Who thinks they're kind of low right now? Okay, we got a lot of highs and a couple of lows. My opinion, for what it's worth, I think interest rates are normal right now. Okay, I've owned rental properties for 21 years. I have $30 million worth of houses. Most of my rental properties have mortgages on them that are somewhere in the 6.5% to 7% range, which by all historical measures, by the way, are normal. Now, a few years ago, interest rates got all the way down to 3%, which is not normal. Now, before that, prior to a few years ago, prior to that, when was the last time before that that interest rates got all the way down to 3%? Does anybody know? When? The answer is never. It did not happen in your lifetime, your parents' lifetime, your grandparents' lifetime, your great-grandparents', your great-great-great-grandparents' lifetime. Never. Never happened before in the history of humanity. Now, when do you think it will happen again? Anybody want to guess? I have no idea. My guess, never. In your lifetime, your kid's lifetime, your great-great-great-great-grandkid's lifetime. And you know what? The things that would have to happen to make that happen again, you're probably going to be more worried about the zombie apocalypse than you are going to be about interest rates. Okay? So in my opinion, they're normal. Some people think they're high. I think most of the people who think them high are just comparing them a couple of years ago. Right? And then if you've been around for a long time, you would think maybe they're not so high. In fact, back in, here's a chart of interest rates going all the way back to 1970. From 1970 to 1981, interest rates on mortgages got all the way up to 18%. 18%. So if you're complaining about 6.5 or 7%, how about 18%? Right? Compared to that, interest rates are on sale. This is like the cheapest ever. Now, let's do another poll of the audience. When interest rates go up, what happens to home prices? Do they go up or do they go down? Let's do a poll. Who thinks when interest rates go up, home prices go up? Who thinks when interest rates go up, home prices go down? Okay, we're not getting all participation over here. It can't be right or wrong, so just throw out one. Okay, here's what they do. They do this. They go up and down. Let me teach you something about real estate. Real estate doesn't care about interest rates. Real estate doesn't care about the economy. Real estate cares about two things, supply and demand. That's all it cares about, supply and demand. Only in as much as something affects supply and demand does it affect real estate. Now, interest rates for sure. When interest rates go up, mortgages are more expensive. Not as many people can afford them, so demand goes down. So in that way, when interest rates go up, demand goes down, right? Which is pushing prices down. But there are some offsets. Let's talk about some of the offsets. Why did they raise interest rates? To battle what? Inflation. What's another name for inflation? You know, I hear all this stuff about inflation, and it's always bad. Like, inflation bad. We got to crush inflation, whip inflation, get it under control, stop inflation. Now, personally, I'm going to give you a little different take on this. Personally, I love inflation. Man, I go to bed hoping for more inflation. I just have another word for it. You know what I call? I call it appreciation. Okay? Because when money becomes worth less, that's because what? What becomes worth more? Everything else. That's the whole point. Assets. Where do you want your wealth when there's inflation? Gold, physical stuff, real estate. What does that mean? When inflation happens, it means dollars are not, it takes more dollars to buy something. What? Everything. Like houses. Who's owned a house for the last 3 years? Raise your hand if you owned a house for the last 3 years. Congratulations, you're a lot richer than you were 3 years ago. Nice. What if you had 20? What if you had 100? What if you had 500? Can't go back, can you? Do anything you want going forward. Whatever you think houses are today, oh man, 20 years from now, you're going to look back at today and you're going to say, oh my God, I wish I bought them all. Everybody does. You know, everybody does. So yeah, there's offsets. So yeah, inflation's pushing prices up. There's some other offsets. Normally, when you look at real estate, houses for sale, 2/3 of houses in the MLS are resale, 1/3 are new construction. That's the normal mix. Right now it's inverted. Right now it's 2/3 new construction, only 1/3 resale. People are not selling their houses. Why not? You got it. Because they got a 3% mortgage and they don't want to give it up. Normally, hey, the economy's not bad. People have jobs. It's not bad. Normally, in a normal market, people would be saying, honey, let's buy a bigger, nicer house. But they're not. They're saying, honey, let's stay where we are, right? Because we don't want to lose our 3% mortgage. And because of that, all of that supply is being held off the market. So yeah, there's a little less demand, but guess what? There's also a little less supply, right? And you got to have both, one or the other, to change the needle. So we got all this demand and all this supply, and they're both down. And as a consequence, what happened to the market? Went flat. Didn't go up, didn't go down, went flat. So I'll give you a little data. In Texas, the market, the average price of real estate is up 1.7% over the last year. It's basically flat. Now, the volume is down a little bit, and the cities are all a little different. So let's go into some of the cities. But first, let me give you a Texas roundup. The average price house in the state of Texas, $417,000, up 0.3% over the last year. Flat. Hasn't done a thing, right? Median price in the state of Texas, $339,000, up 0.3%. It's flat, and it's been flat. Now, if you really want to look at the most important number on this screen, it's this number right here, months of inventory. If you ever want to know, like, what's going on in the marketplace, this is the best number to look at, months of inventory. What is months of inventory? How do you calculate, what does that mean? If you took all the houses on the MLS for sale and you stopped adding any more houses for sale, just take what we got that's on the market for sale, don't add any more. The question is, how long would they last? How long before the last house gets sold? It's like, we're not going to add any more groceries on the shelf. We're going to just sell them until the shelves are empty. How long would that take? And the answer is 4.8 months. So let's put that in perspective. They say if there's less than 6 months of inventory, you have a seller's market. If there's more than 6 months of inventory, you have a buyer's market. If there's right around 6 months of inventory that's considered normal, that would be a neutral market. We're still in a seller's market. Now, a year ago, we had 3.7 months of inventory. So a year ago, we had a hot seller's market. Now we have a lukewarm seller's market, but it's still a seller's market. People are like, oh, the market's bad. No, by historic standards, the market's kind of good, right? Not as good as it was a year ago, but that's just relative to whatever. Relative to normal, it's still pretty good because we're still in a seller's market. Now, to give you a little history, some history, closed sales are down a little bit, but like 1%, almost nothing. Active listings are up, that's why we have more inventory. A little history, 2021, prices went up 18% in 1 year. 2022, they went up another 10.7% in 1 year. 2023, flat, right? Interest rates went up, right? Demand went down, and houses for sale went down. So when the supply goes down and the demand goes down, prices just flattened out. Now, I will tell you over the last several months, there's been a little bit of an uptick, right? Not much, but a little bit, but not much. If you dive into some of the different cities, Houston, Texas, average price, $415, up a little, 2%. I call that flat. Median price, $335, up 1%. I would say that's pretty much flat. Closed sales has just turned from down to up, so we got a little uptick in the volume, so that's kind of interesting. Months of inventory, 4.4, a little better than the state. Not as good as it was the last year, but not a little better than the state. A couple of other data points. Lease listings flat. Lease prices are up a little bit, 1.6%. Now, when lease prices are up, what does that mean? That means apartment buildings are full, apartment buildings are empty. What do you think? They're full. Yeah, they're full. So that's interesting too, the commercial data point. 2021, prices in Houston went up 16% in 1 year. 2022, they went up another 10% in 1 year. 2023, flat, 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 flat. Volume went down, buyers, sellers both went down, prices flattened out. Dallas, give you a couple of other data points. The average price house in Dallas, $499,000, flat, crazy, very expensive. Median price, what is that, $395, down 1%, call that flat. Months of inventory, it's the best market in Texas by a little bit, 4 months of inventory. Last year had 3 months of inventory. Lease prices down just a little bit, 2%, a lot of new inventory there. A little history, in 2021, prices went up 20%, 2022, they went up another 15%, 2023, they flattened out. They're up 1%, which is flat. Now, Austin is an outlier, and I'll tell you a little bit about Austin because something very unusual happened in Austin. The average price house in Austin, by the way, is $549,000. That is not a typo. Most expensive city in the state of Texas, Austin, Texas. We did a little research trying to figure this out. Turns out Austin, where'd the name come from? It's actually Latin for San Francisco. Yeah. Yeah. Down 5%. Median price, $425, down 5%. Months of inventory, 4.6, about the same as the state, a little better, not as good as it was a year ago. But here's the outlier. Here's something very unique happened. In 2021 is the outlier. 2021, Austin, Texas, house prices in Austin, Texas in 1 year went up 29%. I was there. That's where most of my rental properties are. In 2021 in Austin, Texas, there was 0.4 months of inventory, less than 2 weeks of inventory. When you put a house on the market in Austin, Texas in 2021, any house you put on the market, you get 11 offers in a weekend. 1 would win, 10 would lose. The 10 that lost, they'd put an offer on a second house that got 11 offers in a weekend. 1 would win, 10 would lose. And this happened again and again until people got so angry, they started to scream at their realtors. What's wrong with you? You're giving me bad advice. I keep getting outbid. I need to buy a house. What do you have to do to buy a house? And in that very never happened before unusual year of 2021 in Austin, Texas, in that very unusual market, it became normal in that abnormal market for people to buy houses 5 to 10% above appraised value. Do you know the bank will not let you buy a house above the appraised value? The total down payment and the total loan cannot exceed by $1 the appraised value. If you really want to buy a house above the appraised value, you got to put your down payment, you got to get your loan, and then you got to take a big sack of money and plop it on top of that after all that, right? Which you can do if you really want to. But in that very unusual year of 2021, it became normal for people to buy houses 5 to 10% above the appraisal. 2022, it didn't get any better, went up another 10.4%, and then in 2023, down 8%. So in most of Texas, it went up 30%, flattened out. In Austin, it went up 40%, came down, flattened out. If you bought a house 3 years ago, you made 30%. Congratulations. If you bought a house 1 year ago, went down 10%. So it's perspective, and that was because of the correction from 2021. But other than that, they're all the same. San Antonio, the most affordable major city in Texas, average price $372, flat, median price what is that? Something, 9, down 2%, basically flat. 5 months of inventory, slowest month market in Texas. 2021 up 16%, 2022 up 12%, 2023 down 2%. So where are we going from here? Well, let's talk about what's driving the market, starting with the economy. Now, the economy does not drive the market directly. It drives the market indirectly. Like consumer confidence. You know, if people are confident, they're a little more likely to buy real estate. Consumer confidence is measured on a scale of 0 to 200. How confident are you? Right now, the average is 103, just over the middle, right? So people are a little confident. Unemployment, we have solid employment. Anything under 5% is considered basically full employment. Job growth, we're growing a lot of jobs here in Texas. Stock market, you know, again, the stock market doesn't directly affect real estate, but if people look at their 401k and it went up, they're like, oh, I'm richer, right? They're a little more likely to buy real estate. And businesses are growing here in Texas. Housing affordability, interest rates, for sure. Interest rates went up, and that's making them less affordable, so that's pushing prices down. House price trajectory is flat, so that's not really going up or down, it's just flat. Housing supply, listings, yeah, they're flat. We're adding more, but just keeping up with the demand. Months of inventory is pretty good. We're less than 6 months of inventory. Housing permits, we're not building enough houses. You know, we got a problem, and we're not keeping up, so that's pushing prices up. Construction labor growth, we have a problem. Contractors are dying. They're getting older, and they're not getting replaced. The average contractor is like 58 years old. And, you know, and there's a shortage, and that's causing a really difficult time finding contractors. So if you have a teenager, here's a little advice. Don't send them to college. Buy them a hammer. Yeah, seriously. Right? They'll make way more money. Do you know how much contractors make? Okay, like there was a surgeon right here in Houston, and his toilet backed up. He had to hire a plumber to fix the toilet. The plumber gives him a bill, and he's like, you know, looking at the bill like, my God, this is like the kind of prices a surgeon might charge. And the guy's like, yeah, I used to be a surgeon. Plumbers make more money than surgeons. I know a lot of millionaire plumbers. I know some multi-millionaire plumbers. They make more money than surgeons. Okay, I'm just saying, right? Send your kid, give them a hammer. They'll make a lot more money. They'll be happier. They won't have to build up a bunch of student debt. They won't have to work for some jerk in the rat race. I mean, you can do whatever you want, right? I went to college. My parents went to college. Now I'm a father of a teenage boy, and I'm telling him he can go to college, but he doesn't have to go to college, you know, if he doesn't want to go to college, right? And contractors are making fortunes. And then demand, you know, closed sales trajectory is down a little bit. Pending sales trajectory is flat. Migration, now this should be a triple-sized bullet, so there's a little error here. These are not all the same. This one should be 3 times bigger than all the others. What is migration? Migration is the ratio of people moving in versus people moving out. Last year, California lost 500,000 people. Last year, Texas gained 500,000 people. Where do you think they went? Yeah, probably. And there's another 6 million, we don't know where they went, but I bet a lot of them are here too. And they need a place to live, right? And I got to tell you, you may or may not know this. Do you know we're in the middle of a housing shortage? Who's heard of this? Housing shortage? America has 6 million fewer houses than we need for people that need to live somewhere. 6 million. We're not building enough. People keep having babies. People keep moving here. We have millions of shortage. We're not building enough, right? It's harder to get loans. It's hard to get contractors. We're not keeping up with the demand. And all of that is doing what? Pushing prices up. So for all of you that were hoping or waiting around for some big correction, yeah, that was probably it. Wasn't much, was it? Yeah, the correction was it went flat for a while. That was about it. Now, you see all these data points. I don't know, what do you think? Who thinks prices are probably going to go up from here? Raise your hand if you think houses are probably going to go up. Who thinks prices are probably going to go down from here? Okay, see a lot of ups and a couple downs. I'll give you our forecast. That was it. Interest rates are going to decrease. They just went down a little bit more. It's really the only thing holding us back is interest rates. And they're starting to come down. They're probably going to drop another 0.5% by the end of the year. Mortgages follow. And we expect sales will be up about 2%. Now, don't expect some big boom. We don't expect a big boom. We expect things to just kind of go a little up. Price will probably be up another 2%, not a lot. So there's nothing big pushing things up. There's nothing big pushing things down. And by the way, we've been doing market forecasts for 20 years. We've always been pretty much spot on. And it's not because we're like geniuses. It's because this is not that hard. Trying to predict the economy is really hard. Trying to predict the stock market is impossible. Trying to predict real estate, it's not that hard. And the reason it's not that hard is because you know everything. We know exactly how many houses we have. We know. We know exactly how many we're building. We know how many people are having babies. We know how many people are dying. We know about how many people are moving here, and it's a lot. We know how many houses are being built. We know how many we're going to need. We know how many we're going to have. We know everything. The only thing we don't know is exactly what interest rates will be in another 6 months or whatever, and we have some guesses around that. But the point is the major things that affect supply and demand are pretty well understood, and that's why there's nothing big that we see on the horizon. We also had an election, I heard, that's over. I'm sure no matter who you wanted, you're probably thinking, thank goodness, it's over, so settled, and that's going to open things up again for the reason that a lot of people were kind of holding back, right, until their person won or lost, right, and then they're like, okay, the world's still here, it didn't blow up, now it's time to get to business and get back to work. Okay, was that helpful for you guys? Any questions on that? Any questions? No? Did you all learn a little bit? I'll give you a little commercial feedback or data. We also do commercial, multifamily, top 10 cities with the strongest absorption rates. Dallas, Houston, Austin, right? 3 of the top 10. Now, I'm going to tell you, I do commercial and multifamily and all kinds of commercial assets. I hated commercial 3 or 4 years ago because interest rates were 3%. And I'm not in, I'm out. I'm not interested in that. And the problem, when interest rates are 3%, multifamily is very competitive. So people are buying these properties, they're paying top dollar, and they're financing them with 3% mortgages, okay? And they could make enough money to pay the 3% mortgage. But here's the thing, commercial deals are 5-year deals, right? Commercial loans are not 30-year loans, they're like 5-year loans. Commercial syndications are typically 5-year syndications. So when you do a commercial syndication, you have to ask yourself, what's the world going to look like in 5 years? That's the question, right? And the problem is, if your interest rates are 3%, which has never happened before in the history of humanity, is that likely to continue? And I would say, no, that's ridiculous. So the interest rates went up to normal, and all those 3% mortgages are coming due. They got to refinance at 7%, 6.5%, whatever, right? And even at the same price they paid for the property, in some cases they can't now refinance it with a higher interest mortgage and get enough income to pay the mortgage. So some of those properties are in trouble. Now, here's the thing. If you calculate prices on commercial properties, right, net operating income divided by cap rate, right, cap rates follow interest rates. You probably don't know what that means unless you're a commercial person, but the point is that when interest rates go up, values go down. When interest rates go down, values go up, okay? Cap rates are getting compressed, interest rates are going down, which means we're on a trajectory of lower in the future interest rates, which means higher prices by a lot. Okay, so you always want to invest in commercial when you're in this slope of interest, not in this slope of interest, and that's where we are right now. So whereas multifamily was very hot a few years ago, I was telling people it's a dumb place to be. Right now, multifamily is cold, and I'm telling people it's a smart place to be, right? Because you have to understand what interest rates do to cap rates and how cap rates affect prices. And Austin, Dallas, Houston, okay, we got 3 of the top 10 markets in absorption rate. It's the hottest markets. That's where you go. Office, I stay away from office. You know, COVID blew up office, obviously, but there's so many dynamics. People are working from home. They're never all going to go back to the office. Some will. There's just so many unknowns there, and there's a lot of vacant office space, and I'm really not interested. Retail's doing okay. It depends on what kind of retail. Strip malls are good. Local shopping is good. Big box stores have problems. But in terms of strongest markets, Dallas, Houston, boom, boom, boom. Austin, yeah, again, 3 of the top 10. Industrials, all kinds of niches in industrial. Storage is pretty hot. Storage, you know, self-storage, really revolutionized over the last few years. Technology. Used to be if you had a self-storage center, you had to hire some guy to watch it 24/7, little watch guard, you know, that lived there or something like that. Well, the guy's gone. That guy's been replaced by an app. So now if you have a storage facility, you run the whole thing from an app on your phone. There's security cameras, gates, codes. You know, you can open a locker from your phone. When somebody leaves, you tell them, leave your broom swept clean, take a picture, upload it to the app. We'll give you your deposit back. Everything is right over the phone. So you don't need anybody at the storage facility anymore. And because of that, storage has become a hot investment. Now, prices follow what? New construction, right? Because every time somebody moves, they need storage, right? They tend to get a storage unit when they're moving from one place to another. And because construction's been down, right? Storage has been kind of flat to down, but it's starting to come back. But it's been revolutionized mostly with technology, so it's a very hot thing to own. Any questions on either residential or commercial? Question in the back.
So as of right now, the only thing that you would pay for if you choose to is the $100 for the REI.
Yeah, if you want to join the REIA, it's $100. You know, please join the REIA. Everybody here should have $100. If you don't have $100, I don't know if you should invest in real estate, but please join the REIA. The training is free. If you join the REIA for $100, then when you come to get the workshop, you actually come as a VIP. So you really should do that, and it's a great experience.
What I'm asking is, are you going to upsell us anything when you come to the 3 days?
We have a vast network. We have every imaginable resource here. So what do you want? I got something for you. Do you want loans? Do you want to partner on deals? Tell us what you want. We have everything. But I will tell you this. Get training, figure out what you want, and then when you decide what you want to do, because everybody's different, then say, hey, do you have help with this? Do you have help with that? And we will hook you up with resources. Absolutely. And if you want it, great. If you don't want it, no problem. So absolutely. Yeah. But before you ask for something, figure out what you want, get free training to figure that out. So, okay? More questions? REIA, Real Estate Investor Association, every city has REIAs, Real Estate Investor Associations. We have the biggest REIAs in Austin, Dallas, Houston, and San Antonio. So we have a network of 7 REIAs across the state of Texas. On the online network is where you find lenders, post deals, ask questions, get contractors. I need a plumber, I need a general contractor, I need an attorney, I need a title company, I need a realtor, I need a whatever, right? So vendors connect up with people. You're going to need a team. We call that a power team to invest in real estate. You're going to need a lot of money. The money either comes from private lenders or it comes from hard money lenders. You find those through the online network. So whatever you need is within this community. You need marketing resources. We have companies that provide those lists. I showed you all those different lists, right? You can buy those lists. We have CRM systems that actually follow up using AI or other technologies to follow up. We have people that are hunters and skinners and negotiators and partners and, you know, I mean, the trick in this business is get education, learn how it works, figure out what you want to do, you're all different, and then work with the resources in the network to build your teams and to build your business. Does that kind of answer your question?
Yes, but can you talk more about the training that the organization offers?
Yeah. What about it? I just spent like an hour and a half on it. I mean,
So all of this is just, it goes deeper when you actually sign up and not.
I'm going to spend 24 hours over 3 days going very deep, right? I mean, yeah, I mean, we're going to spend 24 hours, you know, getting through those 12 different strategies, those 65 marketing methods, the closes. I mean, I taught you a couple of things, but obviously I don't have time to spend 24 hours right now. But
The 3-day training, is that only if you sign up, or is that?
the free day training, we want everybody to get the free day, the 3-day training. It is free. If you cannot afford to join the REIA, just come to the training. Totally free. I encourage everybody to join the REIA. It's a wonderful organization. If you read anything on the internet or any book on real estate that you've ever read, every single book you will ever read says if you have any interest in real estate, join your local real estate investor association. This is the biggest and best one in Texas. So if you're interested in becoming a real estate investor, I suggest you join the REIA. You don't have to, but we suggest that you do. What makes this event possible is our network of vendors. So we have a big network of vendors. They make money selling services and resources to the members of the community. I mean, does that answer your question? Okay. You had something you wanted to add or say?
Two questions. One, are these slides available on the internet, or the marketplace available on the website?
We do. If you go to the Texas REIAs, Facebook, Instagram, YouTube, we actually broadcast online. So yeah, you can see all of this stuff online. And we update it all the time.
Come back to this question, I think, when we go through the 24 hours of training.
Yeah.
Because I've been to other real estate.
Yeah.
Where they're like, oh, well, if you join $10,000 or whatever, then, you know, get
So
to that kind of thing.
we do commercial, we do residential, we have all these, there's 150 freaking thousand people in this thing. So get training, right? Figure out what you want. And then if you say, I want help doing whatever, right? I've decided I want to do whatever. What other resources do you have? We will connect you with people and resources for that. But I'm going to tell you, before you even ask for help, figure out what you want help to do before you ask for help to do it. But yeah, I mean, this organization is not some fly-by-night. There's a bunch of these out-of-state companies that come into Texas, they do their little song and pony dance, they sell their crap, it doesn't work, it's managed and maintained by out-of-state people, you give them their money, you probably never hear from them again. This organization's been here since 2003. Every month, we've had meetings over and over again. I'm not some guy that's only been doing this one time. I've been doing this for 21 years or part of this organization for 21 years. So if you're going to do anything, right, at all in terms of real estate investing, join your REIA, work with local experts, build a relationship with the people, and whatever you do, my advice is don't do business with out-of-state traveling salesmen. That's my advice. Question?
All right, guys, one more question and we need to wrap this part.
Go ahead.
Hey, when someone signs up for a VIP
Yeah.
member, is there on-demand training on the portal?
No. I mean, the training is the workshop. The training is the workshop. But like I said, there's 150,000 people in this network. There's so many different things. We have people that do storage. We have people that do, you know, assisted living or residential assisted living. We have people that do fix and flip and short sales. We have a whole wholesaling network, buying sellers. We have 1,000 private money lenders. I mean, there's all these different people that do all of these different things. Some of them are completely irrelevant to you. Some of them will be very relevant to you depending on what you want to do.
So in essence, you're paying for the network, more or less.
Paying what? The $100?
The network, right?
Yeah, to join the REIA, it's $100, right? But I mean, it's practically free, and the reason it's practically free is because we have a vast network of vendors. You know, I have vendors that pay me $10,000 a month for me to put them on the website just so you guys get to see them. Okay, so they're paying for your ride here, right? I do recommend you join the REIA because it's something you should do if you have any interest in real estate. You know, but we make it very affordable because everybody should be able to do that, right? And that's what it is. But I mean, yeah, everybody should join the REIA. What's that? Yes, it's a Facebook group that you can interact with and communicate with me and all the other people with. So, yeah. So, and but it's a moderated and a private group. Yeah. What was your question? It's okay.
No, Thomas just came over here and he said something to my eyes and I said the word in Portuguese because my mind was going to Portuguese and there a guy is speaking Portuguese. I'm like, oh, God.
All right, you guys can speak Portuguese. What is your question?
So I know, like if we pay for it again, with the REIA or whatever. My question is, as soon as I sign up, what would you say like is the best way for me to like network with like investors?
What are you looking to do? What are you looking to do?
So right now I do just wholesale.
Okay, so you heard what I said about wholesaling. Nothing wrong with wholesaling.
Yeah.
It is the hardest thing to do, the most work per dollar made. So I'm going to teach you 10 other things that will make you more money with less work. That's number one. Nothing wrong with wholesaling. I'm just saying it's simple, I get it, right? But there's many things, most of them are no money. So people are drawn to wholesale as easy, no money. There's many other things that are no money. They're a little more complicated, but they're not as hard, right? It's really hard to find properties at 60, 70 cents on the dollar. You can do it, it's a numbers game. So you're gonna learn a bunch of other things, right? Are you looking for buyers?
Yes.
Are you looking for?
Like learning, like you said, like learning the whole thing.
Yes.
You're gonna learn the whole thing over the 3 days.
Like I want to be in the long run. So like build up those relationships.
Great.
Like people that been doing it for like 30, 40 years.
I've been doing it for 21 years. We have people that are doing it for 30 years. So yeah, I mean, networking, start with the REIA, join the Facebook group, interact. There's post videos and other things online. There's a YouTube channel. We post videos and stuff online. Come to the workshop. You're going to meet me and other people, right? And then just decide kind of where you want to go with that, right? Everybody adds value in their own way. If you want to keep wholesaling, great. We got plenty of buyers for you. I'm going to tell you you're going to make more money if you buy the properties yourself, because if you have a great deal, why wouldn't you just buy it yourself? And if you say, well, I don't have the money to buy it myself, partner with somebody with the money or borrow private money. Private money is faster, cheaper, better than hard money, right? And the deal pays for the money. And if the deal can't afford to pay for the money, what would I say about the deal? So you're doing the hardest thing. You're finding the great deals. But then instead of you doing the great deals, you're giving them to me and other people. I'm saying you should do the great deals, right? Why would you give up the great deal, right? And if it's the money that's holding you back, then partner with the money or borrow the money. And we'll connect you with people. You know, I want you to find me deals, right? I'm going to have you do some of the work and I'll provide the money. We'll split the profit and I'm going to make a lot of money because I taught you and offered to do that, right? And you're going to do a lot of the work and that's going to be a good deal for both of us.